أعزائي الدارسين، أهلا بكم في الجزء الثاني من محاضرة اليوم الذي سوف أشرح فيه الهدف السادس من الباب الثاني، حيث أوضح لكم خطوات انسياب وتدفق التكاليف الجردية وتكاليف الفترة وصولا إلى تحديد تكلفة البضاعة المباعة وإظهارها في قائمة الدخل. كما أتناول بالشرح أيضا مفاهيم كل من التكلفة الأولية وتكاليف التشكيل. Hello dear students, I am pleased to meet with you again in this second part of the session to illustrate issue of learning objective number 6. In this second part, I will illustrate the flow of both inventoriable and period costs, in addition to definitions of both prime and conversion costs. Let us now follow the steps through which manufacturing or inventoriable costs flow to be assigned to products. You will see how cost of goods sold and period costs appear in the income statement. Cost flow illustrated. As I illustrated in my previous sessions, number 1 and number 2, manufacturing costs are classified into 3 groups. It can be classified into 2 main groups: direct costs and indirect costs. And inside the direct costs, we classify it into direct materials and direct labor. So, as I illustrated in the session number 5 now, we classify costs, manufacturing costs, into direct material and direct labor and overhead or indirect costs. Indirect costs are called for now overhead. So, if we follow the costs, manufacturing costs, we begin by determining direct costs, direct materials, sorry. But notice that we mean by direct material cost, we mean the direct material used in production, not all the purchased materials. No, we want to measure cost of production So we have to measure the cost of that portion of materials which was used in production, in processing. In order to calculate this cost, we say that at the beginning of the period, we have beginning inventory. Let us assume it was $11,000. Beginning inventory. But this inventory will not be enough to start and complete production. أنا زي ما قلت لحضراتكم في بداية المحاضرة إن لو سمحتم كل واحد يقفل المايك بتاعه. يعني أصوات الناس البائعين الجائلين دي وأي حد هيتكلم ده هيفسد اللقاء، هيضطرنا لأن اللقاء بتاعنا ده هيطلع ديستورتد ومش هتقدروا تفهموا منه حاجة. وأنا ممكن بعد كده ما أعملش لقاء أونلاين، أكتفي بأن أنا يعني أرفع لكم محاضرات متسجلة بدون أي انتراكشن بيننا وبين بعض. فلو سمحتم نلتزم بالنظام، كل واحد يقفل المايك، ما يفتحش المايك إلا لو كان عايز يسأل سؤال، وأفضل أن يكون أسئلة توجه في نهاية المحاضرة عشان ما نعملش انتربشن لبقية الزملاء اللي بيسمعونا. أشكركم. To determine the cost of production, we have to calculate the raw materials used in production plus labor cost, direct labor cost, plus indirect costs, or what is called overhead. These are the three elements of manufacturing costs. As for direct material cost, please note that we mean the materials used in processing, in production, not all the materials purchased. So let us see now. First, at the beginning of the period, we have beginning inventory in the storeroom, assuming that it amounted to $11,000. This quantity will not be sufficient to process or to produce all the units required during the period. So we have to purchase additional quantity. So we have beginning inventory in addition to direct material purchases during the period. We have beginning inventory amounted to $11,000, and in addition to this, we purchased materials during the period with the amount of $73,000. So if we added $11,000 to the purchases $73,000, the total will be $84,000. This $84,000 represents total costs of materials available for use. This is the materials which were available for use during the period. During the period, when the factory needs quantity of these materials, it sends materials requisition to the storeroom to have the required quantity. So at the end of the period, the total amount of materials available for use, we issued of this total quantity, and after this issuance, we found ending inventory at the storeroom at the end of the period amounted to 8,000. As we mentioned now, the total cost of materials available for use were 84,000. When we subtract the ending inventory, which is 8,000, we can know that the quantity issued from the inventory room to be used in the factory in production will be 76,000. This is the material used. But look, this method in determining the cost of materials used, when you determine material used through this method is not precise, because the difference between ending inventory and the total amount of material available for use, this difference does not mean that all this difference is issued to the factory and used in production. The difference means only that there is $76,000 cost of materials issued. This issued, yes, but we have no proof that all the issued entered in the factory, entered in production. Some of these materials may be spoiled or may be stolen. This method is an approximate method to determine the costs of materials issued. But if you want to have a precise method, companies must have records. Material ledger must have a material ledger. In this ledger, we follow each type of material, the quantities received and quantities issued, and the difference is quantities issued from the storeroom. This is the scientific and precise method to determine the cost of materials used. But now, for simplicity, we will assume that all materials issued are used in production. So this was the first cost element, which is direct materials used. The second item, as you know, is labor. These materials, which was calculated to be used, entered the factory and are used in processing the units. So this sum is allocated to work in process inventory. The second item is direct manufacturing labor. Direct manufacturing labor, we assume that it amounted to $9,000. This sum is allocated to the work in process inventory. The third manufacturing cost item is manufacturing overhead costs, or you can say indirect costs, indirect manufacturing costs. We assumed that these amounted to $20,000. So now we can see that the total manufacturing costs incurred during the period on production units amounted to, you have to add it, 76,000 plus 9,000 as labor plus 20,000 as manufacturing overhead costs. The total, as you see now, the total is called total production costs during the period. This is called, as I mentioned in the learning objective number 5 from many minutes ago, this is called inventoriable costs. These costs these costs are costs incurred during the period, incurred on units in process. But as I mentioned, at the beginning of the period, the plant has inventory of work in process. We have units from the last period which were not completed. So this was inventoried. And at the beginning of the new period, we will start completing these units. So the costs which were incurred during the period incurred in addition to beginning inventory. Beginning inventory of work in process, we assumed that it amounted to 6,000. So please make attention, have attention, please. We have at the beginning of the period, beginning inventory with the amount of $6,000. And during the new period, we incurred manufacturing costs, which is called inventoriable costs. We incurred manufacturing costs with the amount of $105,000. This is the total of the three manufacturing costs. These costs incurred during the period, in addition to the cost of beginning inventory of work in process. So the sum of these amounts represents total of manufacturing during the period, total of production during the period. This is the production which we were processing during the period. At the end of the period, when we look at this total production, we will find that some of these units have been completed and ready to be sold. But there is another unit still under processing. So if we want to know cost of completed units, we have to subtract the costs of ending inventory of work in process. Assuming that ending inventory amounted to $7,000. If we subtract this amount from the total amount of production during the period, we will have the cost of goods manufactured. Cost of goods that have been manufactured during the period. The cost is $104,000. These are goods completed and can be sold. This is complete units. The factory will send these units produced during the period to outlets to be sold. So these finished goods will send to outlets. When these goods, new production, sent to outlets, outlets have beginning inventory of units which were not sold in the last period. So this new production will be added to beginning inventory of finished goods, which we assume 22,000. So look now, we were having beginning inventory of finished goods 22,000, and the outlets received during the period new finished goods amounted to 104,000. The total of this beginning inventory plus the amount of goods received during the period, 104,000 plus 22 will amount to 126,000. This total figure represents total cost of goods available for sale. These goods were available for sale. During the period, we sold some of these goods, but at the end of the period, we found that there is some of the finished goods unsold. So they will be considered ending inventory of finished goods. At the ending inventory, which was not sold, amounted to 18,000. So subtracting this amount from the total cost of goods which were available for sale will give us that when sales occur, will give us the cost of goods sold. Cost of goods sold will be $108,000. And here I would like to stop and to make a comment. All these stages, all these steps, we say that we incur costs. Here we say costs of beginning inventory, cost of goods of materials purchased, cost of materials used. We say cost in each step of these steps, because as we define the cost at the beginning of our course, cost was defined as economic sacrifice. It's a sacrifice. And in all of these steps, the firm sacrifices. So these are called costs. As long as the company or the firm acquire the goods, so all the sacrifices made on these goods are called costs. But when these goods are sold, the cost is called expense. Costs are expensed because when the goods are sold, the company does not have acquisition of these goods. So you will see that I wrote here, step number 4, cost of goods sold, and between braces, I called it an expense. The cost of goods sold, which reached $108,000. This is the cost of goods sold. When this cost subtracted from the selling price of the cost, which is sales revenue, we will get gross profit or loss. Let us see. Deduct. We want to deduct this cost of goods sold, deduct this from revenue. We assume that the goods which were sold at $210,000. So the difference between these costs of goods sold and its revenue will amount to $102,000. This is the gross margin, gross profit. This is a gross profit, not yet. It's not net income because we have another costs incurred in the company and is not inventoriable, as I mentioned. This is only the manufacturing costs, but we have marketing costs and we have administrative costs and should be subtracted in order to reach to the net income. So we say that we want to deduct what? Deduct period costs. Period costs. As I mentioned, period costs are marketing and distribution costs and administrative costs. In other words, period costs are all other costs which are not considered manufacturing costs, which are not considered inventorial costs. When we subtract period costs and assuming that this amounts to $70,000, the net will be $32,000, which is called operating income. This is operating income before tax. I hope that this illustration of the cost flow was clear to all of you. Please understand and study this slide many times, because this will be representing the backbone of our illustration of all the forthcoming parts of our course. And now, when we illustrated this slide, we were assuming some amounts. Let us use these amounts to demonstrate this flow in an accounting shape. In accounting, we have to tabulate schedule of cost of goods manufactured. This schedule is concerned with computing cost of goods manufactured. Let us see cost of goods manufactured. In this schedule, we will be presenting all these steps until we reach determining cost of goods sold. Cost of goods sold. And after we do this, we want to tabulate income statement to determine the operating income. So in order to do this, we have to tabulate income statement. Okay? So this is schedule of cost of goods manufactured, or we will continue to have cost of goods sold. After we know cost of goods sold at the end here, we will use this cost, we will use this cost to be subtracted here in income statement from sales revenue and to get the gross profit and to continue to have the operating income. Let us see now. In order to calculate cost of goods sold, we begin as illustrated, we begin by calculating the manufacturing costs during the period and added this cost to the beginning inventory of work in process, and then subtract from the total the cost of ending inventory to attain to finished goods during the period. Then finished goods during the period will be added to beginning inventory of finished goods, and the sum of them we will subtract from it the ending inventory of finished goods to have cost of goods sold. So let us now see these steps. First, we calculate direct materials. Notice that we will calculate direct materials used in production, not purchased. And this will be computed as follows. Begin with the beginning inventory, which was assumed $11,000. In addition to purchases of direct materials during the period, $73,000. The total is $84,000, which is called total cost of materials available for use, not use, available for use. Deduct ending inventory of this direct material at the end of the period, 8,000. So we will have cost of direct material as direct material used as 76,000. This is the cost of the first item, cost of direct materials used. In addition to this, we have direct manufacturing labor, 9,000, and also we have manufacturing overhead costs. In this example, I intended to give you the details of some details, not all the details, some details of manufacturing overhead costs. Because if you were given a question and overhead is not in total, but were in detail, it is not difficult that you calculate the overhead costs by computing this, collecting this. I assumed that the overhead costs consists of indirect manufacturing labor and supplies, heating, lighting, and power, depreciation of plant building, depreciation of plant equipment, the total is 20,000. Notice that in the previous slide, I gave you the total directly, 20,000. But here, I intended to give you this figure, this number, in details. Summing the three cost items of manufacturing, the sum is 105,000. This sum is manufacturing costs. This is manufacturing costs incurred during the period. This is the costs, manufacturing costs, which were incurred during the period. These costs were incurred in addition to costs of beginning inventory of work in process. So we say plus beginning work in process inventory, 6,000. The total will represent total manufacturing costs, total manufacturing costs, total production costs. But this total represents all the units. Some of these units were completed, but the other is uncompleted. It's under processing. So if we subtracted the part which was uncompleted minus ending work in process inventory, we will have the cost of the part which was completed. Cost of goods manufactured, cost of goods completed. This is the cost of goods completed. As these goods are completed, we will send them to outlets to be sold. When we sent them to the outlets, outlets were having beginning inventory of finished goods from the last period, which were not sold in the last period. So when the outlets receive this new goods, new production, they will add it to the beginning inventory. So we say now, plus beginning finished goods inventory at the outlets, the sum of new manufactured goods during the period and beginning inventory of finished goods, the sum of these two represents total cost of finished goods available for sale. These goods were available for sale, but were not sold. All of these units. Only some of them were sold, and we have another part still unsold and will be considered as ending inventory of finished goods. So when we subtract the ending inventory of finished goods, we will have cost of goods sold. This figure will be transferred to the income statement. This is the cost of goods sold. We will subtract this cost from the sales revenue to have gross profit or gross loss. Yes, as you see now, this figure was transferred here. Revenue, as assumed, was 210,000 dollars, and we subtract from this figure cost of goods sold, which was taken from the schedule of cost of goods sold. By subtraction, we will get gross margin. Gross margin, which is 102 This is gross. If you want to have the net operating income, we have to deduct the other costs which are not inventoriable, which are called period costs. Operating costs. Period costs here, I intended to give it to you in some details. It consists of research and development costs, design costs, marketing costs, distribution costs, and customer service costs. So we have, by deducting this, we have operating income $32,000. In addition to the previous demonstration, in which we classified manufacturing costs into three elements: direct material costs and direct labor costs and overhead costs. In addition to this, we have other cost considerations, which I would like to make you know it. Two additional terms we use to describe cost classifications in manufacturing costing systems. Prime costs. We use this terminology in cost accounting. Prime cost is a term referring to all direct manufacturing costs, all the direct manufacturing costs, which consists of direct materials and direct labor. The sum of these direct costs is called prime cost. Another terminology, which is conversion cost. Conversion cost. By conversion cost, we mean direct labor and indirect manufacturing costs. Direct labor plus overhead equals conversion costs. As for overtime labor costs are considered part of indirect overhead costs. Although this is paid to workers, and as you know that workers' wages and salaries is considered direct cost, but the overtime labor costs are considered as indirect overhead costs. And now you will see some exercises, and please do it yourself completely by watching these videos on Schoology, as I recommended. Schoology application is very useful to you. You will find this illustrated in details in videos, and you will have exercises in details, so you can solve it yourself. In addition to this, I also recommend that as we are finishing now chapter 2 with its 6 learning objectives, So you are required now to train yourself to test your information by solving 3 quizzes. I put them on Scholarship. Quiz number 1 is quiz about learning objective 1 and 2. Quiz number 2 is concerned with learning objective 3 and 4. Quiz number 3 is concerned with questions of learning objectives 5 and 6. It is very, very important that you exercise and solve these 3 quizzes. And please, you can solve each quiz 1 time or 2 times, 3 times, or 4 times. Let us see now some of the exercises. Question number 1. Which of the following formula determine cost of goods sold in a merchandising entity? Merchandising firm. Can we say that cost of goods sold in the merchandising entity is calculated by adding beginning inventory plus purchases plus ending inventory plus? No, this is incorrect. Or can we say beginning inventory plus purchases minus ending inventory equals the cost of goods sold? It seems correct. But let us see the third option. Beginning inventory minus purchases, no, not complete. Beginning inventory minus ending, no. So the correct answer is the second one, letter B. Which of the following formula determine cost of goods sold in manufacturing entity? In the last question number 1, he was asking about merchandising entity. But now he is asking the same question, but in manufacturing entity. Beginning work in process. Don't forget that he is asking about cost of goods sold. Beginning work in process plus cost of goods manufactured minus ending work in process equal cost of goods sold? Of course not. Because this formula is concerned with calculating cost of goods completed, cost of finished goods, not cost of goods sold. Can we say beginning work in process inventory plus cost of goods manufactured plus? No. Cost of goods manufactured, أيوة. Attention. Cost of goods manufactured minus beginning finished goods. No. Beginning balance, whether in raw material or work in process or finished goods, the beginning inventory always we say plus. Beginning inventory we also added, but ending inventory is that which is subtracted. which we say deduct. Cost of goods manufacturing plus beginning finished goods, till now it's correct. Minus ending finished, yes, this is correct. And so on. I hope that you complete by yourself solving the rest of exercise. Thank you, my dear students.